Hello, welcome to the European Open briefing for Tuesday, September 12th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we are seeing further improvements in risk appetite this morning. The dollar is making further gains against the yen. The dollar index is somewhat lagging the dollar-yen pair, and as we saw yesterday, we are seeing the hurricane Irma slowly receding after hitting the state of Florida, and we are seeing further easing of tensions over North Korea, although that of course is unlikely to go completely away anytime soon. The euro is somewhat struggling this morning. It's slipped below the 1.20 level. Yesterday we had several ECB policymakers further signaling that policy normalization is on the way, though the euro is at the moment being mostly affected by the dollar's rebound. The pound is somewhat firmer this morning. Yesterday at midnight UK time, UK Parliament voted in favor of the Brexit repeal bill, which transfers all EU law into UK law, so that should make it easier for basically once the UK leaves the EU, it would mean that it would be business as usual up until Parliament one by one later decides to review every single one of the EU laws. But there's going to be other events in focus for the UK. We've got inflation data coming later today. We're going to have jobs figures tomorrow and Bank of England meeting on Thursday. And another notable mover this morning is the New Zealand dollar. We had election polls putting the ruling National Party ahead of the Labour Party, so that triggered a 1%, more than 1% rally in the New Zealand dollar ahead of elections later this month. But let's start first with the dollar. We can see the dollar index and dollar yen pair have largely been moving in coordination, though we see that dip in the dollar index. That's because we did see a bit of a bounce back for the euro and the pound this morning, weighing on the dollar index currently at 91.83 after briefly topping the 92 level. Dollar index the dollar yen pair rose to 1 week high of 109.59. It's currently trading around 109.55, and the dollar is being supported by a recovery in US Treasury yields, particularly 10-year yields, as risk off recedes, and the main thing that's triggered this risk appetite, risk on sentiment, is the fact that Hurricane Irma didn't have as much of a devastating effect as was feared, plus North Korea didn't conduct any fresh tests over the weekend, sort of that has had a major impact in boosting US Treasury yields. We also saw US shares also rallying sharply yesterday. The S&P 500 closed at a record high. That was boosted by insurance stocks, as the cost to insurers isn't as much as it doesn't look like it's going to be as much as the worst case scenario following the two hurricanes over the past few weeks. There's also a bit of optimism that the tax reforms will happen, and also in focus this week for US will be inflation data on Thursday and retail sales numbers on Friday, and of course all of that comes ahead of the FOMC meeting next Wednesday on September 20th. So the risk on appetite has had a downward effect on gold prices. We can see the precious metal has been drifting downwards all week. It has steadied somewhat after touching a 1.5 week low, $1,322.85 an ounce, currently trading at 1,327, and also the global equities, basically globally share prices are up. In Asia they were up strongly this morning. Next support for gold is seen around $1,318 an ounce. That's assuming it continues to go down. But it should be mentioned that the UN Security Council did vote unanimously to impose tougher sanctions. They banned textile exports. They put a cap on how much oil North Korea can import, as well as a ban on visas for overseas workers. So North Korea may still choose to retaliate following this latest sanctions, so it's too early to basically say that the current risk-off is completely over. Moving on to European currencies, we can see the euro has been weakening since touching that fresh 2.5-year high of 120.92. Yesterday we had no less than 6 ECB policymakers speaking, all of them pretty much saying the same thing, that policy normalization will be the central bank's next move. Just to mention a couple of statements, a couple of remarks. The Estonian central bank head Ardo Hansson said that policy normalization will be very gradual and in fact has already started, since given that of course the ECB as of April did lower the bond purchase from 80 to 60 billion, and we also had the executive board member Benoit Cor saying that compared with past shocks, policy will remain more accommodative, and he didn't seem too worried about the stronger euro having a significant impact. Moving on to the pound now, the pound has risen back above the 1.32 level. It's been hovering around that level for the past couple of days. Yesterday, last night at midnight, British MPs did vote in favour of the repeal bill, which basically transfers all EU laws into UK law. That's something very important that had to happen if Brexit was going to go ahead smoothly. There were fears that given that Labour voted against the bill and also some opposition within Conservative MPs, that the bill might not pass, but in fact we saw the reverse. We saw most Conservatives voting in favour and even some Labour MPs voting in favour of the bill. So Theresa May had a comfortable majority in that vote. Of course, the bill will come under further scrutiny later in Parliament. Moving on to the Australian and New Zealand dollars, we had NAB business survey data earlier today out of Australia. The NAB business conditions index rose to 15 in August. That's a 9-year high and tripled its long-run average. So that should have been good news for the Aussie, but instead we saw the Aussie drifting. It briefly slipped just below the 0.80 handle. It has firmed this morning, but soon after that to around 0.8046. Although it may have been boosted by the New Zealand dollar, which surged high. We'll come to that in a bit. The NAB Business Confidence Index, the other component of the survey, actually fell from 7 to 5, but overall it was a very positive survey, but there was a mixed response in the markets. The New Zealand dollar on the other hand surged more than 1%. We had polls out this morning in New Zealand showing that the ruling National Party have increased their lead over the main opposition Labour Party. It was feared that Labour was on track to, they actually made a quick reversal in their fortunes, and some polls were even putting Labour ahead of the National Party, so there were fears that the National Party might lose the elections on September 23rd. But this latest poll by Newshub Read puts the National Party with a near 10-point lead, so that obviously pleased the markets. We saw the Kiwis surging to 0.7320 before easing a little bit. The reason for that is markets don't want Labour to win because they don't have as market-friendly policies as the National Party. It's going to be a very quiet economic day. We just had the NAB business confidence numbers there, and later on, well, a short while coming shortly will be UK inflation data. Out of the US, it's just going to be the JOLTS job openings. That's it from me. Thank you very much for watching and have a great day.